Well, very good, very good. We appreciate you guys being here today. Again, this is a little different. Most of the Trading Pub events are held in after market hours, so you guys can focus on the education and not worry about positions. But today we thought it'd be kind of cool to bring Daryl Martin in here and take advantage of some opportunities in a live market. So Daryl's one of the commentators for the Trading Pub. If you go to our website and click on our story, you'll see a little bit about him and his background, but he's an outstanding trader, does a great job. We've had him several times, always get great feedback. And the cool thing with Daryl is it'll be all about the markets. I promise you that. So you guys will definitely enjoy having him here. What I'd like to do is, again, it's always very cool to kind of see where everybody's tuned in from. So I'll put the map back up there, and you guys should see a copy of the map. But looks like we've got pretty much got the world well covered. One last thing, we have a new member of the Trading Pub team that just started working with us. Glenn is in the room, and so everybody be sure to type in a warm welcome to Glenn. We appreciate him joining the team, and so we'll just continue to hopefully do a good job of educating you guys on the markets and providing those opportunities to you. So Daryl, at this time I'll turn things over to you, and the room is yours.
All right, here we go. Let me pick a monitor. There we go. All right, so monitor coming through pretty good. All right, so I just want to make sure that definitely is coming through. All right, so let's check out a couple things. Let me pull a few things up for you, and then we'll put it all on the screen and be ready to knock it out. One last thing I want to do, and pull it all up. Okay, there we go. There we are. Right. Let me resize my bar width. A little easier to see. Okay, so let's see here. So we got a lot of people who haven't traded Nadex. Definitely sign up for a Nadex account. It's what it is basically. The Nadex is the North American Derivatives Exchange. Okay, and that's North American Derivatives Exchange, and they're an exchange in the United States. They're registered, regulated by the CFTC. They have the exact same exchange regulation status as the CME. And they're owned by a holding company called IG Group out of London. They're publicly traded. They're a very large six-figure company. Not six-figure, nine-figure company. But they're a massive company. And they own a lot of companies. They're publicly traded on the FTSE in London. And the big benefit is this would be a good poll to actually add in the future. Morgan's an idea. But there's a lot of binaries out there. You may have heard of binaries before, and with binaries, you have a lot of choices. You can go with the the international binary brokers, the offshore, the bucket shops, or you can go with Nadex. That really is your choice. It's either offshore, unregulated, on most of them. Now there are a couple decent choices. I'll talk about one of those other ones for those who aren't in the U.S. And there's Nadex. And like I said, you really want to focus on Nadex. If you're not in the United States, that's where you want to trade it. So why do I say that? Well, let me warn you about a few things. Okay, we just put an article up on our website. One of the binary companies out there, Bank to Binary, they just got kicked out of the U.S. And basically they can't accept U.S. clients right now. They say they're talking to the CFTC, but basically there's no way that they can become an exchange without becoming a completely new company, because of a lot of things. One is what they do, a lot of these companies out there, they'll say 70%, 80% return on investment. And that sounds so good until you think about that's 100% guaranteed loss if you lose. So you make 70 bucks when you win, but you lose 100 bucks when you lose. Not necessarily the risk reward you want to be taking on every single trade, okay? So that's definitely not the choice you want to do. You want to look at choices where you have more options. And another thing they'll do is they'll go in and they won't let you close your trades before expiration. So if you are in and you're up on a trade and you want to take the profit, you can. If you're down and you think, oh, you know what, this probably isn't a good idea anymore, you can't close it out. You got to take maximum loss. Also, a lot of them won't let you go both directions. Like won't let you do strangles, butterflies, calendar spreads, premium collection, things like that. Different strategies that we teach, and so you definitely want to consider all the facts. We actually have a video in our back office members area. If you click on that link that Morgan gave you, if you want to put it up again, I'll show you where to find the video. It actually says why Nadex, and this whole video is devoted to the things you need to watch out for. The number one thing I tell you to watch out for with the bucket shops is the bonuses. They have these bonus plans, and if you sign the bonus plan, and I really don't want to bring up any of them, but like I was actually helping out one of our students who did have an account, and he's opening an account with Nadex, but had an account with another bucket shop out there, and literally they said you have to trade 40 times your account to be able to pull anything out. So if you put in $1,000 and you got the $1,000 bonus, meaning they put $1,000 in your account, then what they're going to do, let's just make it 500. So let's say you put 500 in, they give you a $500 bonus for signing the bonus contract. And what the bonus contract says is you have to trade 40 times the balance. Some of them actually say you have to trade the amount times the total, like your bonus and your amount. So let's just say it's 40 times 500. So you got to basically have $20,000 in $50 transactions. So you have to have a lot of transactions to even qualify for that bonus. And let's say you decide I want to pull the money out. Some of them won't let you pull the money out, period, until you've hit that. Other ones, like the one I was helping the guy with last night, and we were looking on there, and it was amazing. They actually said that what they'll do is first they'll take your bonus away, okay, so your $500. They're going to pull that out of your account. So let's put that on there, $500 out. But then let's say you lost $300 trading. Then they're going to deduct your losses. And this particular one actually also deducts your wins because you used bonus money to do it. So if you made $200, they're going to deduct your $200 and you have nothing left. And so, I mean, I just can't emphasize how important it is that you do go in and you do choose to go with a solid binary broker. Nadex is currently only available to U.S. citizens. However, they do have another division internationally. You can't do what's called Nadex spreads, which are probably one of my favorite trading instruments in the world. The next one would be binaries. But you can trade the price ladder binaries, and I'll give you the link right here. And if you want to worry in the world, they have different divisions all over the world. Like one of the partners at Apex, he's in Australia, and he has an IG account, and so that's one link. If you go there and you sign up for an account, they'll actually push you over to whatever country you need to go to, and they'll take care of you for that. So check that out right there. But again, it's IG Index. And so you can sign, if you're in Canada, you can sign up for IG Index. Now there is an alternative you can have if you're outside the U.S. A little more difficult, but you could set up a corporation like with WyomingCompany.com. And if you have a bank account in the United States and you have a corporation in the United States, then you could trade on behalf of that company that you own, and then trade with Nadex. But hopefully before the end of the year, Nadex will be available to everybody. But in the meantime, you do have like I said, the daily price ladder binaries. The main big difference on IG, and there's a few of them, but the biggest difference is you can't do limit orders. So like basically you have to hit buy when you're ready to buy, and if you want to get out early, they let you. And you have to hit sell when you're ready to sell. So you can't put in an advanced take profit order. So I'd say that's probably the one big weakness on IG is just not having the ability to do limit orders. I have asked about it, I've requested it, I know other people have too. And so far, they don't have that. It gives you a massive edge because you can literally set your trade and walk away. You can let it do its thing in fast markets. So there's a lot of advantages to that. And Nadex does offer that ability for you. So now that we got that covered, the Why Nadex Binaries video right here under tutorials. You'll get access to all this. You fill out that link. So Morgan, if you can post that up there. Also, as soon as you click on that link and sign up for an account, with Morgan right there, I'll show you this. As soon as you go here, okay, and then you click I agree, and then what you do is you fill in the, this literally takes 5 minutes to fill out, okay? So, and it's $100 to fund an account, okay? And this is going to be about trading Nadex binaries. It's going to be about trading IG binaries. It's going to be about trading spreads. It's futures fork. We're going to go through a little bit of everything. But I'm going to show you the specific way that I trade, and you'll be able to use this no matter where you're at on the planet, no matter what you're trading. Okay? So fill that out, $100 to fund an account, get you set up. There are no commissions because you're direct with the exchange. You only pay 90 cents a side, $9 max. So if you do 10 contracts, it's $9. If you do 100 contracts, it's $9. And which is nice. So I mean, think about CME. I mean, you're paying $1.25 or whatever, $1.50 somewhere around there, just for one S&P evening future, and that doesn't get capped. So the larger you do, you still are paying that same amount. You can get discounts. There's ways to do it if you have massive volume, but still, it's not going to ever be $9. So that's how you get an Nadex account. And then we constantly have tutorials, but you can go over here, tutorials, and under Nadex tutorials, it's how to get started, how to get going, who Nadex is, platform tutorials, how to use the tutorial, how it works. No, we're not selling anything here, man. Go to Nadex spreads. Go to Nadex, and it'll give you, this is all free education, by the way. Like everything you see, free right now. But all the education is free. Anyway, so go over here and go to tutorials, and then you also have like step-by-step education on binary, step-by-step education on spreads, and it'll really walk you through it step by step. And let's see here, got a message, got to check that. Pop up on it. 1 second here. All right, so anyways, I just want to let you know that's what we're going to be talking about. So let's go ahead and we're going to try to look at a few markets and see what we can find over here. But check that out if you want to learn more. We had literally a 3-hour free live webinar this morning. I went through trading and went through a lot. We actually uploaded it, and if you want to go back and review that, you can check it out under tutorials. It's being uploaded to YouTube. Okay, let's see. Right now, S&P is playing at settlement. Not really seeing a trade that I would want to get into yet. So let's flip it around. Let's go to check out a couple others. Go to, imagine most of the indices are going to be the same, but we'll look at a couple other ones real quick. Check that. And while that's loading, one of the things we do is we have these deviation levels. You get access to them in our website area for free over here. They're incredibly accurate. Okay, so right here, current deviation levels. This shows you basically today's levels. And whether you're a futures trader, a forex trader, either one, even if you trade ETFs, they can be helpful. They're better for futures and forex. We are working on adding like 3,000 stocks and ETFs and indexes in here as well. But make it where you put your symbol in and it populates it for you. But right here you can see today's levels. Like I said, they have it at 7 o'clock. This is sort of like pivot levels standard deviation, but it's not exactly the same. So those standard deviation, ATR, pivot levels are all going to be historical information. And we're actually a little bit different on that because what we're doing is we're going in to find out, is there, flat too. We're going in to see if there's anything that the market says as far as how far the market's going to go. So instead of going in and saying how the market do yesterday, which is what standard deviation is doing and what pivot points are doing, we're saying what did the market say the market's going to do today? And what we do is we take the implied volatility out of 16 different options for that market, and we make a volatility index. We tie that index into a intraday deviation formula. And what it does for us, it basically tells us exactly how far the market's been going in any given day. And every time it hits a level, what I thought this morning is, like I'll watch it on 10-minute bars. When it hits a level, then that's when you're going to want to go in and tighten your stop. Actually, when it closes the level is the best time to tighten it. And we do have like an indicator you can check out, but I mean the deviations we said are free. If you want to check even the indicator is free to check out. It has the historical information, which is very helpful, so you can go in here and see how far did the market move. And you'll notice like yesterday moved up, hit the half deviation, and then worked its way back down, almost a half deviation down, which would be a full deviation from the high to the low. right there. And you can see over here, 0.5, 0.7, pulled back up. And you'll quickly realize how insanely accurate these deviations are, and they can help you a lot in your trading. If you're trading binaries or spreads, they're great for profit targets. If you're trading futures, they're great for profit target futures reports. And then they're also great for trailing stops. And I use them to actually help me pick out different binary strikes. So it's one of the main uses I have on the deviation levels. But you can go through and you can just see, market moved down, literally hit the 2 deviation mark, pulled back up to 0.7, and then came back down to 1.5 and just oscillated at that for the rest of the day. And I mean, it does this over and over and over again. So, but they're, like I said, they're incredibly accurate and very helpful. Let's see. All right. So on NASDAQ, we're not seeing a whole lot. We have to see, in the last hour trading, you never know if you're going to get a whole lot or a little bit of action. And if you see anything you think's moving, I'll pull it up. So don't be afraid to share. And I'll let you know what I see on that market. Yeah, so they're free. It's right in here. Just click on, if you click on the link, Morgan, if you want to post that link again for them that you have to get access to all of this for free, to check this out. Then click on current deviation levels. So yeah, fill that form in right there. You'll have current deviations only, and then that's where it'll show it. If you do trade Nadex, another thing we have on here that's really helpful, I'll show you this, you can check it out, is it's a scanner. It actually scans all the Nadex spreads live and tells you best risk reward. It narrows them down, and you can filter them to quickly find it, and you can actually open the ticket directly in the Nadex platform. All right, so that's futures. And let's see here, let's go on there. Let's look at a couple other markets because we're just not seeing a lot of action right here. Mornings are a lot easier to trade. Check out gold. Well, gold can be closed on Nadex. Let's see here. Okay, so that isn't gonna. Let me see what all markets we have options for. Nothing I can do if the market isn't moving, so I have to have a market moving. Pulling them up right now to see what the best possible trade would be. We really have the indices to focus on right now. We can go over and check out the Dow, see if it's doing a little bit better on our pattern setup. Let's see here. Tough crowd. Not a whole lot we can do. The market isn't moving, man. I don't know what you think we can do. Let's see. One thing, okay, here's an important lesson for you. Don't ever force a trade. Let's see, NQM, like tech apps. See if the Russell's giving us anything. All right, we have a potential entry right here. So we will have to wait for that entry. I'm very specific on my entries on Apex. So let me add one more thing on my chart. See if we get and check out one other piece. There we go. I'll show you a setup that you could use. Okay. I'll also tell you a trade you can do tonight. So even if we don't get the chance to do it right now, I'm going to leave you with a trade that you can actually go in and take advantage of this evening. Say exactly how to do it. We did this last night, and I went through and I gave basically I said, hey, here's what to do on the FOMC, or not the on the ADP non-farm payroll in the morning, and we had quite a few people go in and risk between 10 to 20 bucks and make $30 to $50 on the trade. So we're going to go out and actually lay that trade out as well. And yeah, there's one coming up tonight that you can take advantage of. So just because we don't get a trade doesn't mean we won't have one. Okay, so here's what I'm looking for right now. I trade what's called the Apex pattern. A big tip for you is log in using Explorer when you're using Onovia. In order to explore, I mean, I love Chrome. I use Chrome for everything. A lot of people use Firefox. I never have an issue if I use Explorer. So that's a big, big tip. So I use Explorer for logging in for Onovia. Anyway, so right here, what we have an Apex long entry. Okay, it's right at a deviation level. And so what we're doing is we're waiting for a break above the previous bar's high. Okay? And we're looking for it to go two ticks above the previous bar's high. So right here, if I go in and I'll pull up the market right here, we got 899 or 898.8. So basically 899 is where we're looking to get in. Then add a tick onto that just to do a bit of spread, so we get 899.1. And so once that happens, we'll actually go in and we'll have an entry. What we do want to see before that happens, okay, is we do want to actually see the bar close above the 8-day moving average. And I also have another thing on here called the Apex Volatile Trend Line. It's like right here, the bar closed above it, so that's my entry. And then, so if you're a short-term scalper trader, okay, this is very helpful. If you're a binary trader, also a very simple trade, and I can show you how this trade would work. But you would have got in right here when it broke this level, okay, and then you could target the 0.7 deviation. And so you'd actually go in and buy a binary, and I can actually show you exactly how it would have worked. So we would have got in at basically right around 12.13. We got out at 900.5. So, which would have been at what time? 2:45. So 2:45, 12:15. Okay. So now let's go ahead and we're going to find a Russell 2000 daily binary right here while we're waiting on this entry. Because right now we have a lot of down volume happening. There's no obviously there'd be no good reason to take a long at this point. I wouldn't take a short, but I definitely would not take a long until we get the confirmation. And patience is so massive to trading. If you just try to go in and force a trade, you're going to lose a lot of money. So I prefer to have the best setup whenever I put my money at risk. All right, so we're right up here at 900.5. And so we're going to find as close as we can get to that. We have an 899, we have a 901. All right, so let's check out the 901. That's really, we also could check out the other one as well. And then I'll just open that chart up. Now you don't trade from the charts. I just want to show you how it works on the charts. So I trade on actual real underlying market charts. That's another big mistake Nedex traders make is they don't go in and trade based on the charts. They'll trade based on like these charts right here or spread charts or whatever. You need to have true underlying market charts. And if you don't, like I said, if you follow that link we're going to give you, I'll show you how to get access to the platform and free data on futures and forex live data. All right, let's pull up one other one, 899. And let's check it out. Let's go back a little bit to down a little bit so I can easily pop it back up. We're waiting on that one. Okay, so again, 12:15, getting out at 1:45. Okay, so on this chart right here, then it could have went in and we could have bought the 901 binary at 12. Let's find it over here. 15 for 20 bucks. All right. So that would have been the cost. All right, $20 to buy that binary. And we have it. We know what strike we're buying because we're targeting the deviation level. And I use this all the time. Yeah, I'm looking at the E-mini S&P, or not the Russell 2000 E-mini futures, which is TF, and the current month is March, so the March contract. So right here, we would have bought that, would have got into it for $20, and then we're going to sell it when it gets to the level right here. So I actually put in my sell orders at $43. Anybody who watches anything I know, you know how I do it. I always get out at 43. Why? Because when I'm targeting a strike. The reason is when it gets to that price, there's three things you can count on binaries, always. Well, at least on price ladder binaries like on Nadex and IG. I can always count on when it gets to the strike, it's going to be worth 50 bucks because there's a 50-50 chance it's going to be there at expiration. That is your biggest advantage in Nadex, is understanding that simple rule. Okay, the other two prices you can count on is it'll be worth either 0 or 100 at expiration. All binaries, maximum value is 100 bucks. Okay, so if I buy it for $20 and I sell it for 43, again, why do I sell 43 if it's going to be worth 50? Well, first I got to add in a little bit of bid-ask spread. Okay, so that could be, the bid-ask spread can range in size, but just count on 3 to 5 pips. People go, oh, that's huge. Dude, it's not huge. Don't worry about it. This is about limiting your risk. $20 making a 100% return. Now, each point move on Nadex is $1 if you're trading the spreads. So not on binaries. Binaries were completely different. So on the spreads, I'm buying this for 20 bucks. So on the binary, yeah, then we could look at a spread trade as well. That's a good idea. We'll go ahead and pull that up and see a good spread. Anyway, so it's working on closing. Almost just triggered the price. All right, so when it gets there, $43. So I want to have the price for bid-ask spread. I also want to have a couple ticks in case it just misses my target by a little bit. Okay, and so we know we got out of this trade at, let's see, what time was it? It was just to go in. Sorry, 1:45 there. So at the latest, we would have been getting out of this trade at 1:45. Okay. So if we go over here to 1:45, because that's when it hit the level, then we could have got filled and out easily at $43. Trade profitable. That's simple. So apex entry, target deviation. You want at least a 1-to-1 risk-reward ratio. So 20 getting out at 43. That obviously means our 1-to-1 risk-reward ratio, and that allows us to easily go in and trade it. And so what I can do right here to help out on this chart, don't think it's going to let me zoom in any more than that. Let me do this. There we go. Make it a little bit easier to read. We got in right over here. I get about 11.15. So we got in over here, right around 20 bucks. And then we sold out at about $43 here when it popped up. And notice we got it just because we set that tighter take profit. Here's the 12.45. There we go. Okay, so it did go a little bit higher at 43. So we actually were able to easily take our profit. And all they use is an apex entry and a deviation. So it's very, very simple. Now, a binary, one of the things that's really important, let me double check and see where we're at on this. Haven't hit it yet. Very close. There we go. Okay. Yeah, so that would be your entry right there, closing above it. And we'd be looking at that same 901. Okay. So you go 901, that's your trade. It's the exact same trade we just had. Okay. So 901 and buy. Yeah, a little bit late because on the webinar. But so do a buy order, order received. Okay. Now it's in my open position. Now what I'm going to do, so I'm going to click this right here, and I'm going to say take profit at 43. I'm going to hit place order. Okay, it's basically the exact same trade. So we got it, took profit, taking it again. So it goes on up there, doesn't have to move that far. Get about a point or two before the market closes, and it'll work in our favor. Now, personally, I do like it when I have more time to expiration. I'm not as big on, trading right into the bell, but you can do it. I like to have time for the market to move. And one thing you'll notice on here, like we have a unique type of bar that we use, and it's a really right here it actually times it. So it's not time stamped, it's not like 5-minute bars. So these are actually 8-tick bars on here, or 9-tick bars. And so on the timestamp right there, you can see how it slows down. And you usually get a massive slowdown in the bar when it goes and turns around like that, okay? So we get that massive slowdown right there, market turns around, we got a big slowdown right here. It is right as the market's turning around. Same thing, slowed down, market did a pullback. Slowed down, market did a pullback. So got a very small pullback, but I got a pullback right there nevertheless. And this was just really slow movement. I mean, it didn't really spike up, but you can see when we get these spikes in time, usually you're going to see the market reverse. And so that's really, really helpful. Let's see here. And now we just leave it there. And our risk is only $24 on the entire trade. So, because that's, what did I get in at? $24.50. So now let me show you how to read a price ladder binary. And I'm not quite sure what you can't see, but if you can tell me what you can't see, I can definitely make it easier to see. So I can do that if you want me to. That helps out. So right here, let's look at price ladder binary. On the buy side, okay, and this is a really helpful tip if you get this down. And this is later in the day, so that's why it's so tight. That's why you see all these no quotes. But on the buy side, it is your risk. Okay, so this is how much money you are risking when you place the trade. Risk. So $33 is my risk. $7.50 is my risk. $3 is my risk. $76.50 is my risk. One of the biggest mistakes traders make when they trade binaries is they trade them based on risk. Well, your risk has nothing to do with where the market's going to go and if that trade's going to be profitable. Okay, so you need to have a specific profit target that you're going to go for whenever you do the trade. So risk. Now, how much money can I make? Well, it's always worth $100. So $100 minus, so that would make my risk on the trade $63. If I go over here and look at my open position that I have on, that I paid $24.50 for, then I can make, if I held it to expiration, I can make $75.50. Okay, so $75.50 is what I can actually make on the trade. If I held it all the way to expiration. So $100 minus the offer price when I buy is how much I can make on the trade. My risk is whatever the buy quote is. All right. Now let's flip it around on the sell side. Okay. And these will get really volatile as we get closer to expiration. On the sell side, this is my profit potential. Since this is my profit potential, this is what I can make. So I can make $97 on this trade. I can make $94.50. I can make $73. I can make $30.50. Okay. So that's my profit potential on the trade. My risk, and again, act like the bid side doesn't exist when you're buying. Okay. And act like the sell side doesn't, then act like the offer side doesn't exist whenever you're selling. So this right here is my profit potential. So I can make, $73 if I sell this. I make $75 if I sell it. My risk on the trade is $25. Okay. So that is literally my entire risk on the trade. $25 to make $75 if I hold it through to expiration. If you get down that, and minus the bid quote is my risk, and the bid quote is my profit potential. So I'll repeat that for you again. $100 minus my bid quote is my risk, and the quote itself when I'm selling is my profit potential. Buy side, the quote is my risk, okay? And again, same formula, $100 minus it is my profit potential. So that literally is what there is to binaries. And you could straddle it. So you could, buy this one for $34.50 and sell this one for $73.50. If it expires above 901 or below 899, then you're going to make money on the trade. So now let me go into explaining the simplicity of, and probably the most important thing you want to do is you always want to set a take profit order. Not setting a take profit order I haven't opened any new screens. Not setting a take profit order, okay, is basically a guaranteed way to lose on binaries. So you definitely want to set a take profit order on all of your trades. No matter what you do, set a take profit order. And so you just click here and set the take profit. Now I already set a take profit. That's what we did at the beginning. Okay. So right over here, with the green arrow on your open positions right there. Yeah, always set a profit target. And use that rule that I gave you. When I'm buying, I want to sell when it hits my strike that I'm buying at 43. So I need to make sure I can buy for, at least less than 25 bucks, ideally, 20. So we would have got in at 20, but popped in a little bit late because of the webinar. Now, if I'm selling, okay, I want to buy back at 57. So if I'm selling, I want to buy back at 57. So very simple rule, but very effective rule when you're doing what's called an out-of-the-money binary. So now I'm going to do a quick summary of what do I mean out of the money and how does this whole binary thing work, okay? So we got a live trade on. We're waiting. We're just letting the market do its thing. When you buy a binary, you are saying that this statement is true, that the U.S. Small Cap 2000, the Russell 2000 futures, March contract will be greater than $8.99 at 4:15 p.m. Okay, I'll come back to that, Vaughn. So the Russell 2000 March contract will be greater than $8.99 at 4:15 p.m. When you're buying it, you're saying that is true. So if at 4:15 it's greater than $8.99, then you make money. Okay. If it is not greater than $8.99, you bought it, you lose everything. At expiration, again, this is why I tell people do not hold to expiration. All right. And these are completely different than their spreads. The spreads are just like trading the underlying market. That's why they're probably one of my favorites. But that's a lot longer webinar. And if you want me to trade anyone education, we can only do so much in 1 hour here. So $8.99. So buy that right there. And if it expires above it, great. So right now it's already above it. So this is actually what you call in the money. Market's already above it, and that basically means your risk is greater than your reward. It's premium collection. Okay. So as long as the market stays above $8.99, you'll be profitable. Now, if you sell a binary, then you're saying that the statement is false. You're saying it will be less than or equal to the price. So if I sell this, I'm saying it's going to be less than $8.99. So if it's less than or equal to $8.99, then I'd be profitable on that trade. And that's how a binary works. So true, buy, sell, false. Now, I rarely hold binaries to expiration. So just because it's a true false statement at expiration doesn't mean you have to hold it. It's just like buying and I mean it's not just like, but like buying a call or a put on a stock. If you buy a call, it doesn't mean you have to hold it to expiration to see or not if you make money. You can close it. Same thing here. Okay, if you buy a put, you don't have to wait, to see where the market's at whenever it expires. You close it early. Same thing. People forget that rule that they use it all the time when they trade calls and puts. They forget it when they come to binaries. And there's a lot of different time frames that come out. They'll actually have dailies every day. Okay, and they'll start at 8 a.m. And then they'll start at 6 p.m. So they'll start at 6 p.m. on Tuesday, Wednesday, Thursday, and Friday. They start at 3 a.m. on Monday. And those will be the daily binaries. And then they'll also have weekly binaries that start at 3 a.m. on Monday and go all the way through to 4:15 on Friday. And then they have intraday binaries that start at 8 a.m. and they start every hour. So 8 to 10, 9 to 11, 12 to 1, 2 to 3, 3 to 4 that you can trade. So there's constantly tons of strikes available for you to be able to trade and trade on the market. So it's very simple to do. It's really not that hard to do, but you do got to have some of those basic rules down for it to work for you. So yeah, we're got to get a little bit more right there. We need 901. So we'll see if we get up there or not. All right. So looking over here, how did I pick that strike? And there's 2 strikes I could have chosen, but I couldn't have got. We were so late. There's no way I could have gotten the 901 at a decent risk reward for the $8.99. We would have been out of that trade already because we were right here when we got in. Right here, The way I took the strike was I used the deviation level. So it is a casino if you don't have a plan. So if you go in here and just randomly, that's a great comment. If you go in here just buying, like these are the casino binaries, these $3 binaries, okay? Like, man, I'll make 97 bucks. I mean, you go in here and you go, you know what, I'll do 20 of these. I'll risk 60 bucks and make 1940. Well, let's go put 60 bucks in the slot machine, see if you make $2,000. Same thing, okay? That is a casino mentality. And all trading is a casino mentality if you don't have a plan when you trade. So you have to have risk management. You have to understand statistics. You need to have a trading system that defines your entries. So you need to know your probability. How often do you win? How often do you lose? So I have a record about 70 to 80% we have over there, posted on the site. Profitable trades, so you need to know all those stats to not be a gambler. I don't care if you're trading stocks, forex, futures, options, spreads, binaries, or whatever. They're all casinos if you let them be. Think about it. Casinos aren't gambling. The casino itself, right? Why? Wait a minute. They're playing the same game you are. Well, no, they understand the stats. They have everything set out in their favor. They have limits. That's one of the reasons casinos have limits at tables. Because if you had enough money, let's say you're Bill Gates, you could walk in and you would always win. You could just bet black on roulette and double up every time you lose, and eventually it's going to hit black and you're going to win. And so that's why they cap out the tables, so that way people can't come in and basically force them to take a hit on their trade, or on the floor there at the casino. So you definitely want to make sure that you're putting together a risk-reward management plan, and that you have your risk management in place. Otherwise, yeah, I 100% agree with you. It would be. And what I do is I have what's called diagnostic trading. That's my style, which is where I look at how different people in the market look at the market. So how do, let's see here, let's put it together. How do statisticians look at the market? And that's what the deviation levels are for. And then I look at, technicals. So, moving averages, things like that. How would they look at the market? Then I look at how fundamental, so like what's coming out that would cause the market to move. And then I look at seasonals. So what's the seasonal probability of the market being up or down on this day? I use all four of those pieces to come up with a trading plan. And that combination allows me to be one step ahead of the market because I know where I'm going to go, where the market's going to move, and how I'm going to take advantage of it. And the majority of the time, it works out really well. So, so great question. As I mentioned earlier, Bert. So why would anybody trade it given the the bid-ask spread? Well, one is it's the wrong focus. It's looking at the forest of the you're missing the forest of the trees. So I'm able to risk 20 bucks and make 20 bucks. I don't care about the bid-ask spread. So, and I know that sounds funny. That's huge if I'm hopping in on futures and everything else. But I mean, bid-ask spread is not my concern. I mean, I'm getting 100% return on my money, and I'm doing it in minutes, or maybe an hour or two. Maybe I'm getting 200% or 300 or 400% on my money on the trade. So I have a great, easy opportunity to go in and take advantage of that. And the bid-ask spread, I mean, that's market makers. It's not Nadex. Nadex doesn't have anything to do with bid-ask spread. They don't make anything on the bid-ask spread. It's just whoever's on the other side of the trade. And so that really doesn't, to me, it's the ability to limit my risk and never get stopped out. And that's the big thing is, you want to trade futures, how many times you get stopped out? Forex, how many times you get stopped out? If you don't get stopped out, then you're taking massive risk on. My risk will never increase. I got in this trade, and let's just say the market does fly down. It flies down to 897 or 895. Okay? Well, I'd be down a lot. Went from 901, down to 895. Then, well, I mean, let's say 900 down to 895. Then I'm looking at a $500 loss on a Russell contract. Okay? And trying to make, I'm just trying to go in for a couple points. I'm not going in for a whole lot. So a couple points, and that's a $500 stop loss. Let's say it does go down and turns around and comes back up. Then I actually can still be profitable. So one trader was stopped out, the other trader wasn't. So that's one way to trade on Nadex right there. We have our order in, and we may close it out if we don't get some decent action soon. But the market's not really moving for us real good. And then now the other thing, okay, this is just the, remember I said this is my second favorite. Yes, you can sell or close your order prior to expiration, but you can't set the limit. Like I have that limit take profit order in right now. You can't set that. Okay. So you cannot. Yeah, you can't. You have to wait until the market gets there. That's the one thing I don't like about IT. So we have that in there, and then the next thing I'm going to look at. You want to be the market maker? Well, the market maker, yeah and no. I mean, every single market has a market maker. I mean, in reality, okay? All stocks, forks, futures, I mean, I can bring up any single quote on anything, and there is a market maker in between the two. So, and a market maker is taking risk of your trade. They do have to leverage off that risk, and a lot of market makers go bankrupt. So these market makers are huge, and they do insanely millions of transactions a day, and they have the ability to offload the risk to another side somewhere else. So is the spread tighter throughout the day? Is it widest at open and close? It's pretty consistent, actually. So there's a maximum for every market. So you'll see it stay pretty consistent. The other thing that is in place is you'll notice, this is a live account, by the way, yeah. But the other thing that you're going to notice is the only time it's really going to get wider would be like right in the middle of news, like on a fast market, and that's all market makers are going to widen the spread on the news. So, but yeah, some people will hop on, they get all upset about the spread, and but I mean, it usually won't get, it'll get tighter, but it usually won't be the big thing I would focus on. But again, I don't make my focus on the bid-ask spread because I make my focus on the ability to not get stopped out of the trade. Now, the other way to play this trade, okay, let me pull it up over here. And this might be something that's actually, you may enjoy more. Like I said, I enjoy it a lot. That's how I like to trade on a pretty consistent basis. When I'm trading, I prefer to trade this way. But so many people are interested in the spread, so I'm constantly teaching about the binaries. So I'm constantly teaching about the binaries. But I teach about both. And by the way, I do have like A to Z and all this stuff that we're going over. This is don't see this as a big, issue. Yeah, so I mean, spread 2 ticks, $20. This is 450. That's actually pretty tight. So good point. But go in here, and I'm going to show you the actual spreads. And we have basically, on this trade, we have 25 minutes for the market to come back up. Okay? So if the market comes back up, hits us at 43, great. And of course, you can always get out whenever you want to, too. So right here, under the scanner, I can go in. Yeah, we'll have to do a morning webinar. Like we did the other day. We did it. What was that? Was that last Tuesday, Morgan? We did the webinar on the U.S. Canadian. So went pretty well. Made some money, bought everybody lunch in about 5 minutes. So yeah, we just got to trade during times that there's actually trades to take. Let's see here, Russell. So if we find one that we like, I don't like any single trade I see on the Russell right now. So on the spreads, and this is a scanner I have, like I said, that makes it a lot more. So if I want to buy, let's see, the Dow actually has a couple decent ones on it. US Tech, the S&P. That's actually not bad right there. It's only 8 minutes left, but it pops right at the end. That's even better. Let's look at that trade. I'm going to pull up the S&P 500. Okay? All right, so let me pull up the S&P 500 over here. And to get it on the right screen. Okay, so we got the S&P up, and then tick size, we got, let's see. Nine, so we change the tick size on this to 9 ticks. All right, see what we got over here. Okay, I think this is a good example to show you. You're in here, let's say you hopped in this morning, okay, like 8:30 on this trade. So now it's like up, down, you know, the entire time. Like your wrist literally is, your heartbeat is going nuts when you're trading, right? And you get the you can check out the scanner for free over on our site, Vaughn. You know, if you like it, great. Not, whatever. It's cool. But I made it for my own trading because I love trading Nadex and I needed it for myself. But you can go over here and look at the spread. So you could get in multiple times. So we could get in like right now, do the same price as if we try to get in. I mean, just to show you how tight this is, 9:10 in the morning Eastern time, and here's where we're at right now. So we have not moved like all day. And you could go in and go, okay, I want to buy the S&P 500. And if you want to buy the S&P 500, see let's see this. Then we want to, say it's out of the money, it's up to 14.95. Where's the S&P right now? 14, that's right there. Not the money. Okay, so, all right, so this is 14.95 to 15.25. Okay, so this, like I said, when you see this, if you're a future trader at all, you'll be like, that's pretty nice. All right, the risk on this trade is extremely low. All right, let's look at this again. Make sure you got it. The risk on the trade is 12 bucks. The profit potential is $284. Okay, so extremely, and that's like I actually factor in the exchange fees. So like on entry and exit, so it'd be about $11.80 with 90 cents on each side. So I'm factoring that in on the scanner because as a trader, I want to know every single cost. That's my risk. Okay. Now, on every spread on Nadex, and this is a beautiful thing if you trade futures and you know like one of the challenges with this is on every single spread on Nadex, every single tick is always worth $1. So you're not dealing with like 10 ticks, 20 ticks, 30 ticks, 40 ticks, 50 ticks, you know. You're not trying to like break it down and figure out 1/4 of a cent or 1/8 of a cent and how much is that tick worth. By the way, we just took profit on our Russell trade. So right there. Let's see where, that's the wrong chart. Put the Russell back up. There it is, took profit. Too bad for nothing being there. All right, so we took profit right there. Order filled, 43 bucks. So there's dinner. Tough crowd. At least we're making some money. All right, so the S&P, we were going in, we were doing that trade, which was $10 a risk before I stopped. Every single tick is worth $1. All right, so right now it'd be like 14 bucks a risk. Every tick's worth $1. And here's one of the cool things about the S&P E-minis on the Nadex. It ticks in 0.1. Okay. Well, if you trade the S&P E-minis, what is the S&P E-mini future contract? What does it tick in? So 0.25, right? So it ticks tighter than the actual E-mini. So which is pretty sweet. So your risk of 0.4 is your actual bid-ask spread on this trade, but it ticks in 0.1. So it's almost the same bid-ask spread as actually trading an E-mini. And so you can go in there and you could actually place the trade. If we'd have placed this earlier, obviously it would have been a little nicer. But and let me pull up our chart now that Russell trade is done. There we So you have $14 risk right now. Earlier we had, I'll just put it back at where we had. We had it at 10 bucks. Okay. So on that trade at $10, if every tick is worth a point, okay. Anybody who trades the E-mini, John, I bet you can answer this pretty quick. What is a 1 point move, a 4 tick move worth on the S&P E-minis? 50 bucks, right? So if every tick is worth $1, okay, and a tick is the last decimal. It's a pip, cent, whatever you want to call it. Same thing. So a penny on a stock is a tick. Just the smallest increment, something is quoted in. It's worth $1. And it's quoting in basically dimes, right? 0.1, 0.2, 0.3, 0.4, 5, 6, 7, 8, 9, 10 to the next point. And what is a 1 point move? It's 10 ticks. So therefore, how much value is there in a 10 tick move? 0.1, and then so there's $10. So you're right there. But yeah, 0.1, and then there's $1 in a point. So if it's ticking in dimes, like you're saying, John, then it's a $10 value. No, $10. So it's ticking in 0.1. So 0.1, 0.2, 0.3, every 0.1 is worth $1. That makes sense? So it doesn't matter what market it is, whether it's the euro dollar, whether it's the euro yen, whether it's the DAX, whether it's gold or silver or copper, it doesn't matter. They always, whatever the last increment is, it's always going to move in an increment of 1. So 0.1 or 0.01 or 0.001 or 0.001, like in future or forex. All of them are $1. So it's so simple. Like you don't have to memorize 30 different tick increments and what they're all worth. All right. So since we know that every tick is worth $1 and there's 10 ticks in a 1 point move, every point on Nadex is worth $10. So if it moves up or down, it'll be worth $10. Okay? So that's a $10 move. So 95.4 to 96.4 would be a $10 move. Because that'd be 10 ticks. Because 0.4, 0.5, 0.6, 0.7, 0.8, 0.9, 0.10, 1, 2, 3, boom. Okay, 10 ticks. Now, if we know there's $50 in a 1 point E-mini, and we know there's $10 in a Nadex spread, okay, how many Nadex US 500, they call it US 500 because they have to have their own name, so US 500 spreads does it take? Okay, it's one of those, like, 5, there you go, 5 US 500 spreads to equal 50 bucks per point, like an S&P E-mini. So you can go on here, you can buy 5 of these at the current market price. I mean, right now the market's about to close, and this is out of the money, so there's no volume on it. But this is rare, by the way. So for the best example, I could pull one up. It's going to be a little more liquid here. Just to say, I mean, there's plenty of volume. We're just out of the money at the end of the day, meaning we're below the 14.95 strike right here, so out of the money. So on this trade, and remember we had it set at, I want to keep things the same, so we're consistent on our example. We had it set at $10 risk. We're doing 5. That's a $50 risk. Okay? That's also a $50 margin. Not a $400 margin, not a $500 margin, not a $5,000 or $4,000 margin. It's a $50 margin. Your risk and your margin are the same. So now I'm only risking 50 bucks, okay? And for every tick, it goes, after it expires at 1495.4, okay? Then I'll get back my 50 bucks. If it expires at 1495.3, then, I'm going to get back 40 bucks. So, on down the list. Or, sorry, 1496, because I have the price right here. If I update that. The risk on this is $20 right now to trade the S&P E-mini. So if you want to go long, saying, hey, I think in the last 10 minutes this thing's going to blow up, then you'd be good. So yeah, I mean, basically half a point right now would be break even on a move back up. So now if I go over here, we can see this is 1494.1, and the market's quoting at 1494. So I mean, we're right on the exact same price as the S&P E-minis. So not a big deal right there at all. Now the thing is, the floor is down at 1490. All right. So this trade right here, you could actually let it go in and go, you know what, I think the market's going to go up, at least by a point or two here in the next, 10 minutes. I'm going to put this trade on for $20. And by the way, $20 is my risk on 5 of them, okay? That's my margin. If it goes up, then I make $50 for every 1 point move. I make $10 for every, not 10, sorry, I make $5 for every tick. So, because it ticks in 0.1. So I make $5 for every tick and all the way up. And it's capped at 15.25, which it's funny. I've had people go, you know what, that's not, they cap it. Yeah, they cap it at $1,480 on a $20 risk. I think you'll be okay. All right. So if I were to go on here and I call these box, they call them bull spreads, which makes no sense. I've expressed that quite often to them. I call them box spreads because they look like a box. And so if you go on here, we're actually working on feeding all this into Ninja right now because I want to be able to trade everything right from one chart. But I can go on here, put this on. This is what it'll actually do when it's all done. And my floor is $14.95. My ceiling on that spread was $15.25. Okay. It expires at $4.15. Hit apply. And now, basically, I can see my box. Okay, my ceiling of $14.25. Or sorry, my ceiling of $15.25, which is where I can't make any money past that. My floor, all right, of $14.95, which I can't lose any money below it. Okay, above and beyond my maximum risk on the trade. And then it'll expire at $4.15 at the end of the day. When I'm going to close out my S&P E-mini contracts anyway from a day trader. Okay. And once you get that concept down, it's really powerful. If you want to make it like stupid powerful, you buy 5, let's say you thought the S&P was about to go down. You buy 5 of these and you sell the S&P E-mini. And like if you did that right now on this spread that we have, you'd be like risking like $5 on the trade. So, well, this trade right here. See here, yeah. So if you're buying and selling, so let me flip it. Yeah, we buy. So if we're going to sell, and we actually tell you, sell 1 ES and buy 5 spreads. So it's all actually in here. It tells you what all the ratios are. But so Eastern time. Everything on Nadex is quoted in Eastern time, and I'm actually in Texas, but I actually set my computer to Eastern time, so that way I'm able to, my charts and everything. I want it to be in one time zone. It's hard enough to, read the markets, pick out the trade, manage everything, and then convert time zones. So eventually I just gave in and just set my clock to Eastern time, so everything was Eastern time. Like on most platforms, if you set your clock to Eastern time, then close it and reopen it, it'll set your chart at the same time. Yeah, so hopefully you can see the power. I mean, one, your money goes a whole lot further. I mean, $50, even if you went in and did, like, say, this in the money one right here, and did 5 of them, $215. Okay, that's like a 4-point stop loss on the S&P E-minis. All right, that's half the margin of what you could put with any futures broker. You have no commissions. I mean, you do have exchange fees. You have no commissions, and your exchange fees are capped at $9. And then I know it totally sounds like a commercial. I just trade this every day. So I was on a webinar for 3 hours, free webinar for 3 hours this morning doing education. So I have a radio show every day. I love doing this. It's fun. It's relaxing. You could put this trade on, and obviously now, it's a little late, but you could have put this trade on this morning and set your take profit and walked away, or you could have came in later and closed it. But your risk is never going to grow. Your stop's never going to get hit. And one of the things I say is basically you have a stop loss without having a stop trade, okay? Because you can't lose any more money, but you're still in the trade until expiration. Let's see here. The last thing I'm going to give everybody before we wrap up is tonight. We got Aussie dollar coming up, okay? One of my favorite trades to do on Nadex is strangles or straddles with the spreads. And so what I do is really simple. Let's go in here and go to deviations, okay? And the market will close. It'll reopen here in 2 hours, all right? So the market will open up in 2 hours. We'll update the deviations right about 7:05. They'll update with February 1st numbers. Go down here to Aussie dollar, and I either pick either a half or a 1, usually a 1 deviation. What I'm looking for is a 1-to-1 risk reward. I want to risk $10 or so, 10, maybe 15 at max on both sides. And I'll either do a strangle right before it, or I'll wait till after it. Okay, and if it's negative, then I'll sell down to a deviation. If it's positive, then I'll buy up to a deviation. That allows you to actually have a pretty nice, because you can actually do $25 of risk, so you can do a closer strike. But the further strikeout I want to do is a deviation. And I can either, like I said, strangle it right before the news announcement, which when I say right before, I mean like a solid 10, if not 15 minutes before. Not really further than that. So you're talking 7:15, okay? And then after the news comes out, like here's forexfactory.com if y'all have ever used that site. We also have we have one on our site too. We have decent traffic, but not near as much as Forex Factory. So the nice thing about it is ours doesn't freeze up during the news. But right here under helpful links, then you're able to select that. So I'll show you where that is. We just added a new menu, so I'm wearing it too. And there it is. All right, economic calendar A. So you can go down here. You can also filter it. I can get rid of all these bears. And kill out a bunch of the other random ones in there. But we got a Aussie dollar PPI report coming out. Expectation of 0.4. And look at the history over here. We can actually see they've been missing expectations. A lot of times when they miss it, they really miss it. And so if they miss that, the market's going to go down. They'll actually show a little arrow over here, like up, down, like good or bad for the currency. But basically, you want PPI to be higher. And it's basically the price of goods sold by manufacturers. So it's a leading indicator of inflation, which inflation is part of just money moving, which is good for an economy. And then here they'll also have like a link to the website. And one thing Forex Factory does have that I like on most of theirs is you can actually get the direct link to the latest release. Right here, latest release. So that's another way to see it. But a lot of people don't know how to read the reports. So just getting the updated number is usually enough. It's just if you want to, it's faster to actually go directly to the page. But so that's when the Aussie is going to be moving. That's what you're going to be looking for, okay? And then to help make a move even further, now if one side wins, leave the other side on because it's probably going to be a max loss anyway, all right? China is going to have their PMI come out, and that can flip things the other way because their economies are, somewhat tied in. And you got, other reports coming out as well. And then tomorrow morning, a couple of reports you can check out. Let's see here. I got everything filtered out. The majors back in here. All right, so tomorrow morning, we're going to go in here and, this is for the easiest way. We have non-farm payrolls right here in the U.S., okay, so you're going to be able to use that. That would be, you can do gold or a major indice. And then, let's see here, that. And then tonight, we're going to have a couple other reports. I was looking at them earlier. Just want to show you a couple you can trade on. They're fun to trade on. Is anything else? But there's at least one more. Yeah, there is. 430. Okay, they're calling it manufacturing. So construction PMI. It's actually a pretty heavy impact report on the pound. And so that would actually, if you're a nighttime trader, I'd be going for probably about half a deviation to 0.7 deviation move on it. But pound dollar. So I know the euro one comes out as well, but I'd focus on, they're coming out, pretty close to the same time, but the pound, there's a 4:30 a.m. trade, and then there's some morning trades where you can strangle on the binaries or straddle on the spreads. Just make sure you're combining that with the deviations. Otherwise, you're just randomly picking strikes and guessing. So this makes it sort of literally black and white. So you can't do that. And then, like I said, if you have Ninja, if you don't, you can get it free and you can get data for free. So if you want free live futures and forex data, we have that on the 8 steps section on our website to getting started. But in there, and that's pretty much it. When you use a premium collection strategy, do you hold expiration or set profit target? It depends upon what kind of premium collection strategy I'm doing. So we've been playing with one we're talking about. I've been testing it out with a few of our traders. We have a lot of traders. We bounce different ideas off of each other. And we just made a butterfly one that's actually a pretty sweet premium collection. It's like a 1-to-1. It's done pretty well. It's like 70 to 80% profit. Like profitable trades, but 1-to-1 risk reward. All right. Well, I know this is like a 1-hour webinar, and wanted to wrap up for you. And I appreciate everybody coming on. If you have more questions, definitely available. Hop on our site. Like I said, Morgan has the link for you, so you can come over here, check out all this. One of the things that's getting used a lot is the forum. It's starting to pick up. We just added this in. Yeah, there's like several new posts now. Bull spreads, box spreads, binaries. You're new to it. Just got a general question about Apex stuff, questions about anything. Post it in there. I check it every day, and I'll reply to you, and I'll be happy to help you out. And I reply in pretty decent detail. So like over here, we went in. This is like the butterfly spread post. Always ask us questions about premium collection. And so I went into, they're like, how can you do a butterfly on Nadex? So I'm like, well, here's what a butterfly is. Here's how it works. Here's how you do it on Nadex. Here's the good. Here's the bad. So, a lot of fun. All right, well, I'm going to go ahead and close it on down and give it on over back to Morgan. So I appreciate y'all staying on and appreciate your patience, but you got to be patient for the market, so don't want to force it.
All right, good deal. Thank you, Daryl. We appreciate you being here as always. And again, like you said, it was kind of a tough market, and sorry to throw you in that situation. But again, you had a nice trade. I actually took a couple of them and got my last one off at 61. So looks like I'll have to buy you dinner in New York or something. But again, great job as always, and we appreciate you guys being here. If you guys want to, we had a lot of people in the room that have not opened a Nadex account. You can click on that link that I just sent you. If you open a Nadex account, basically we'll do lots of training sessions on it. We've got a lot of tutorials on our site. You saw a ton of stuff on Daryl's site that'll be free to you guys, and so you can take advantage of that there. Our next trading event is actually going to be on Tuesday at 3:30 after the market close. So we appreciate you guys being here with us. We'll get a copy of the recording posted to our website very soon. So if there's anything we can do for you, please let us know. Again, all the education that we have is available on our website, tradingpub.com. Carlos, you can get the deviations through the members area on Daryl's site, which is a free membership that you can join. So thanks again to all of you guys for being here, and we look forward to seeing you at the next event on Tuesday. Thanks, everyone.